serious whiplash in the past 24 hours. You had Bitcoin dropping all the way down below 30, and now it's back up to roughly around 32. So joining us now to discuss is David Russell. He's Vice President of Intelligence at broker and trading platform TradeStation Group. Welcome, David.
Good morning, Lawrence. How are you?
How are you? I think a lot of people, how they're doing is kind of not feeling well today. But you're looking at the markets from a really unique perspective because obviously you're seeing a lot of flows yourself. So kind of going to Emily's question with our previous guest, where do you see the connection between what's happening in the equities markets and what's happening in the crypto markets? How are the customers behaving? Are they freaking out over their losses in equities and then selling off, let's say, in crypto, or vice versa? How do you see it? I mean, and granted, it's microseconds, but nonetheless, you could probably get some sense, correct?
Well, yeah, I think it comes down to simply risk appetite. At the end of the day, the idea of something like Bitcoin, holding its ground when the market is pulling back significantly, when the Federal Reserve is doing something it hasn't done in over a generation in terms of really not caring what the equity market does, that's going to be difficult for all assets. And I think you always have to realize that, there's volatility in the markets. And when things start happening and people start getting scared, you simply get these kind of follow through. The other thing I think it is important to realize is that, cryptocurrencies are essentially, correlated to the Nasdaq, to growth stocks. If you really think about it, cryptocurrencies are essentially a fintech, in terms of how people think about it. And that entire area of the equity market has been under pressure, for a while now. So I don't think we can really separate those two things because ultimately that's how they do kind of correlate.
Is that connection because the type of investor who would invest in a tech stock is the type of person who would invest in crypto, or is there some other reason why?
Well, I think they're similar assets because they're long-term growth stories. And when interest rates are low, people can price in that kind of growth. And when interest rates start going up, that growth is a lot less attractive. I mean, look at Bitcoin. It's a long-term growth story, kind of like a tech stock that is growing significantly. So I think ultimately that's what it is as an asset. And that's how the market's going to think about it.
But isn't the fundamental principle of Bitcoin that it's a hedge against inflation? Like, shouldn't this be Bitcoin's moment in the sun? I mean, inflation is here, right? Why is it not fulfilling the purpose that it's supposed to fulfill, which is to actually hedge against this kind of other market volatility or against inflation?
Well, I'd say that was it. I mean, right now, a lot of the things that are hedged against inflation don't really work. And you cannot separate it from what's happening in the currency market, for example. The U.S. dollar has gone back to its highest level in a long time. And I think ultimately Bitcoin is, I don't know if I would say it is a hedge against inflation. That's not how the market views it. You could say that about gold, and it hasn't worked recently. So I think that assumption about Bitcoin, there's a certain part of it. But when I really think about what's the exciting thing about cryptocurrencies and things like Ethereum, it's the incredible widening adoption, widening use cases, the way it's going to disrupt financial markets. That is a growth story. That is not a safe haven anti-inflation story. So I think when you really look at it, the idea that Bitcoin is a hedge against inflation, it might make some sense and it might be true at times. But for the last year or two, the narrative in crypto has been growth, it's been adoption. And I think ultimately that's how the market's viewing it right now.
So just going to quickly follow up on that, this could be a direct response to critics like Warren Buffett. What are these use cases that you're referring to? I mean, what are the main use cases of Bitcoin and Ethereum? Because some people would say that there really aren't any big ones.
Well, I am not an expert in cryptocurrencies. I have looked at it, a lot over time. My real focus is in the equity market, but simply the use of it as different forms of payment and things like that. There is clearly areas where people have seen, increased use of it, and it's really not my area of expertise, but I have been able to see how the market views it.
So I wonder, what is the strategy amid this volatility? Are you seeing a lot of folks just shorting away at cryptocurrencies? And if so, Maybe you could tell us which ones. Or how are people hedging their losses? Or is this a buying opportunity?
Well, I take it from the perspective of mostly an equity guy, and that's really, my view. And I think we have to recognize that we've had a situation here that is really unprecedented. The last few times that the market sold off like this, the Fed was willing to step in and be kind or, kind of supportive, like in late 2018, during March of 2020. Now we have a Fed that really doesn't care, and they've made very clear we want to see some pain in the market. We want to get this inflation thing over with. But I think, to me, the thing that is most interesting here is that Jerome Powell has ripped off that Band-Aid really fast. And there's a lot of signs that it's working and that we're nearing a point where these fears are going to be priced in. I think it's important to realize that some of the inflationary things we've seen are starting to ease, things like used car prices, things like lumber. We faced a truly unique situation in the market. We saw a collapse of confidence and bullishness in the equity market. If you look at some of the surveys, like we haven't seen since the early 90s. And the market was only down, 15, 16% overall off its high of the S&P 500. So I think that's really what we need to focus on. We had the combination of a hawkish Federal Reserve and then also an incredible uncertainty of a war happening in an area that's incredibly important to commodity markets, energy, and food prices in terms of, what's happening in Ukraine. These were like a really bad combination of forces. And a lot of that now, I think, is priced in. And so I would kind of take the perspective, where we are right now on May 10th, as a lot of that bad news has been priced in and played out for the last 5 or 6 months. And if you look at it now, things might not be so bad going forward. The 10-year Treasury yield is back above that kind of 3 to 3.25 area. That is extremely important for the Nasdaq, and I would not be surprised if that's really something where crypto investors should be looking.
Nonetheless, I mean, just wrapping it up here, you're looking at, as you said, you're looking at a lot in the equities market. So where do you see the bottom in the Nasdaq happening? I mean, do you think that there's still more room to go downwards, or do you think that we might start turning the corner relatively soon?
I think we're pretty much there. Look at the semiconductor index. All right, so the Qs. I was looking at the Qs. The Qs are back to a level, I think, from March of last year. I don't have it right around the kind of 300, 297 area. The Philadelphia Semiconductor Index is back toward that low of where it broke out back around March about a year ago. These levels now are looking very much like we've priced in a lot of negativity. The main thing I'm focused on right now is the S&P kind of coming down. There's a descending channel. If you look at from the high that we made at the end of last year coming down, this second low is kind of down to that channel, and it's back to where the S&P kind of peaked around March of 2021. So from my perspective right now, a lot of bad news has been priced in, and we've completed something of an ABC correction on the S&P 500. We went under 4,000, and to me, that's really the key thing. I think a lot of negativity is now priced in at this point, and people should be looking for the pendulum to swing back.
So, David, if you're saying a lot of the negativity has been priced in, do you see it stabilizing out from here on out or going lower potentially?
Well, we have this CPI report on tomorrow. From my perspective, unless we have more shocks, we could very much see a kind of buy the news event following this and the beginning of putting this behind us.